It's another 25 minutes on Business Incorporated, live on Channels Television. Let's find out what's going on around the world as we speak. Ghana's government directs large-scale mining companies to sell 30% of their annual gold output to the state entity with effect from July the 1st. Rwanda to exit Kenyan government's fuel deal with effect from August. And Egypt lists state-owned firms in the North African country's privatization drive. Now, great to have you join us on the show. I'm Anete Edet. First, let's get a check on the global commodities market. Now, oil prices rose today following an agreement between the U.S. and Iran to halt recent hostilities in the Middle East. Now, U.S. West Texas immediate futures rose nearly 1% to $69.90 per barrel. Now, for the WTI contract, it settled below $70 on Friday, but this is the price, as you can see on your screen there. For the Brent, was up by 0.68%, and for the natural gas, which is a U.S. fuel there, it was up by 1%, about $69.90 a barrel. Now, the move follows the clashes between U.S. and Iran that threatened to derail negotiations, which is aimed at ending the conflict. Now, U.S. officials said that both sides would pause hostilities and allow commercial vessels to freely transit the strategically vital Strait of Hormuz. Now, let's talk about metal prices. Now, gold prices fell today as recent hostilities in the Gulf fueled inflation concerns that the U.S. Federal Reserve rate hike is pressuring the non-yielding metals. Now, spot gold was down 1.12% at $4,000.50 per ounce. Now, U.S. gold futures for August delivery lost about 0.8% to trade at around $4,000.63 per ounce. Now, the bullion posted a 1.7% weekly decline on Friday and is on track for a fourth straight monthly loss of more than 10%. And this comes as Iran and the United States agreed to halt recent hostilities in the Gulf and renew talks regarding their dispute over the Strait of Hormuz. Now, a U.S. official said on Sunday, that's according to what a U.S. official has said on Sunday. Now, among other metals, spot silver fell to around $57.66 per ounce, while platinum fell by 2.38% to $1,608.10, and palladium is down 0.28% to trade around $1,217. Now, let's leave the metals and commodities markets and focus on a company news. Now, Odwa Investment Limited has announced a record-breaking profit before taxes (PBT) of 23.58 billion naira for the 2025 financial year, and that represents an extraordinary 410% increase from the 4.62 billion naira recorded in 2024. And this comes as a conglomerate unveils an ambitious roadmap to attain a 1 trillion naira level that's by 2030. So the impressive financial performance was disclosed last week during the company's 44th annual general meeting, AGM, held at the newly constructed Premier Hotel in Ibadan. And that's where shareholders also witnessed a significant leadership transition. And this comes as the outgoing chairman, Bimbo Ashiru, formally handed over the reins of the company to renowned businessman and board member, Dr. Tola Kasali. The AGM, which was attended by representatives of 6 Southwest shareholder states, directors and management staff, as well as investors and members of the media, reflects what stakeholders describe as one of the most transformative stories in Nigeria's corporate landscape.
A world-class conglomerate, one of the best in the country, and today we are happy. I mean, declaring a profit of over 23 billion, before tax, and about 22 billion after tax, clearly shows the resilience, the focus, and the dynamics of the board of directors.
We normally plan in 5-year tranches. So Our first plan was between 2021 and 2025. That's 5 years, which we have now achieved. We call it SRC 1.0. S is for sweat, then you have revive, and you have create. But now we have SRC 2.0, and our target is to grow this business from about 3.8 or 380 billion to about 1 trillion balance sheet.
So that was the AGM of Odua Investment, which was held just last week. And now from Nigeria, let's go over to Ghana, where with effect from July the 1st, just a couple of days from now, Ghana Gold Board will be requiring large-scale mining companies to sell 30% of their annual gold output to the state entity. So the deal will be settled in the country's local currency, that's the cedi, and priced at a discount. So this initiative aims to shore up national reserves and develop domestic refining capabilities. Now, the policy intends to secure 15 months of import cover, which is roughly about 157 tons by 2028, and gain the prestigious London Bullion Market Association, that's the LBMA, accreditation for domestic refineries by 2030. And now from Ghana, we head over to Kenya, where we see that in a significant blow to Kenya's oil marketers, Rwanda says it will shift to a direct government-to-government fuel importation model with effect from August. Now, this follows Uganda's earlier exit and other further shrinking Kenya's role as regional fuel transit hub. Now, the new arrangement means that Rwanda will source its fuel directly from governments or state entities rather than through private traders. The move also aims to secure stable supply and possibly better prices for the country. But it is expected to reduce the role of private Kenyan companies in the Rwandan market. Now, for many years, Kenyan oil marketing companies have been a major supplier of petroleum products to Rwanda, while the East African neighbor has been an important export market for them. Okay, so now from there, let's move over to another country, this time Egypt, where 4 state-backed companies have been temporarily listed on the Egyptian stock market as part of government's privatization initiative. That's in a bid to strengthen its capital market. Now, the companies include Engineering for Petroleum and Chemical Industries, Egyptian Linear Akil Benzene Company, Petroleum Marine Services, and the Mamura for Reconstruction and Tourism Development. So the cabinet said that in a statement that the temporary listing is a fast-track pre-IPO mechanism that allows state-owned companies to go on public on the Egyptian Stock Exchange. Now, Prime Minister Mustafa Madbouli announced plans to list 4 to 5 state-owned companies on the Cairo Stock Exchange. Now, Egypt's government also said it is transitioning from in-kind to cash subsidies starting from next financial year to ensure support reaches targeted demographics. And now, still on the African continent, South Africa's currency, that's the rand, it edged up higher a little bit earlier today as investors await a batch of month-end economic data to assess the state of Africa's largest economy. Now, the rand traded at 14.2 against the dollar, and that's about 0.2% stronger than its previous close just earlier today. Now, on the domestic front, investors will track some economic data releases, including South Africa's money supply, the private sector credit, the central bank's inflation expectations survey, as well as the trade and budget balance. However, analysts say these indicators may be overshadowed by Tuesday's anti-immigration protest that's planned for tomorrow, which is flagged as a main near-term risk. So we'll find out how that will impact the country's economy in terms of the data that will be expected to be released just in a couple of hours from now. So we go on a quick short break, and Business Incorporated will return. You're watching the program live on Channel Television. Welcome back. It's still Business Incorporated live on Channels Television. Now, before we head to the market, let's talk a little bit about micro, small, and medium enterprises in the country. Last week was the MSME Day, to be precise. That was Friday last week. So, at the same time, Smaden has already said that they would be granting about 500 million naira to boost small and medium enterprises. Now, speaking at a conference to mark this year's World MSME Day, the Director General of Smaden, Mr. Charles Odi, says the agency will be partnering with state governments for creation of small SME centers while sustaining its funding interventions for small businesses across the country.
Ecosystem, the work. We are at the final stage of getting our polytechnic license. So by this time next year, when we meet, when people write JAM, they will have the opportunity to feel that they want to go to Smaden Business School. When that guy who's hungry comes to Smaden, he can learn a skill of fashion design. All he needs to do is to go and buy raw materials. When he buys the raw materials, he comes here. We have 120 sewing machines. He can book one, convert that raw material into a suit like this, and go and sell it in the market. That's what all the people there are doing. We'll set up CNG conversion center for the auto technicians. We'll set up a green field for agriculture for the purpose of setting up GSM repair machines. When the essence of setting up our furniture, for the purpose of setting up the last one, which is our digital school, so that people here can learn skills that they can use to better their lives.
Okay, so now let's talk about the markets. We're starting first on the African front. Well, we see that most of the markets were a bit in the red, except for the Johannesburg Stock Exchange. Nigeria's stock market, which is last week, most part of the month of June has not been too good for the market. It's been down so far. Month to date has been down about some 17%, if I'm correct. But I'll check that. And then, of course, we'll also have analysts to talk about that. For the Nigeria stock market, it has dropped all the way from the 250,000. We have just about 2 trading days left for the month of June, and so far the market has been down. So it's most likely it might be a June not to be remembered for the market. But for the Johannesburg Stock Exchange All-Share Index, it was a massive intraday gain. Earlier today, let's not look at that dates there. 1.46% intraday, and the market is crossing. That's for the Nairobi Stock Exchange as of Friday, 222.42 for the index. Now, for the other markets that we track, the EGX 30, so a little bit of a fast finger there. We're still talking about the African market. The EGX 30 was at intraday, it was down by about 1%, and that number has been changing, 49,842.57, while for the Nairobi Stock Exchange, where we saw there 1.46%. Now, let's talk about the Middle East markets. And we see that the Middle East markets, most of the markets are in the red, and this is because investors are actually assessing the truce which was announced. It's been in the news-wise all around, that that news of U.S. and Iran's truce. So they're watching it with some caution, because just anything could happen, and that, of course, would have a negative effect on the market. So the markets are actually trading cautiously. For the Dubai Index, 5,944.06, and it was down by 0.40 at intraday, while the Abu Dhabi Index, it was down by 0.54% at 9,826.86. And now let's talk about the other markets within that, the GCC region. The Saudi Arabia's Tadawul down by 0.78%, 10,822.07, while the Qatari Stock Exchange was also down 0.41%, 10,251.83. So most of the markets around the Middle Eastern region were in the red. But let's hope that maybe at the close of today or maybe tomorrow, there will be a pickup as the month of June gradually comes to an end. So now let's talk about the Asian markets, as well as the, starting first with the Asian markets. We see that most of the markets around this region were lifted by a tech rally. So it was a mostly positive close for those markets, except for South Korea's Kospi, which was down by 0.20%, 8,394.65. But that market has actually rallied so far this year, because at some point when it had that political turmoil, you saw the market being in the red, but then it picked up, and then just a little bit of a profit taking by investors. Of course, we've been talking about AI, tech chip, and the impact which is having on tech-related stocks, as well as the price of some of their goods, like the likes of Apple and so many other tech-related stocks. We also see that there's an investment going on in that country, which was announced by the country's President LBMA. So Nikkei 225, 69,000, almost hitting the 70,000 index level, all the way from 40,000, 50,000, 60,000, and then into the 69,000, almost nearing 70,000. Now, for the other markets, for Shanghai, 1.16% for the Shanghai Composite, 4,073.90, while for the Nifty 50 India's benchmark index, which also have the Sensex, but the Nifty 50, 23,946.25, 0.46% in the red for the close of Monday's trading session. Now, from there, we move over to U.S. markets, where ahead of the opening bell, 2:30 Nigerian time, the Dow Jones Industrial Average, as well as the S&P 500 and the NASDAQ, all in the green. 0.31% for the DJIA, the S&P 500 0.74%, and for the NASDAQ index 1.11%. So that is, like we mentioned in the other markets there, that the impact of tech-related stocks as well as AI companies are actually rallying all the markets which are on the NASDAQ, as well as some other markets which are related within the U.S. stock, within the U.S. market. But just about some few days from now, the U.S. markets, that's on Friday, will be on holiday. So let's just hope that the start of the week would also end in the green for the rest of for this week, which is the end of June as well as the beginning of July. So we keep eyes on how that market performs. Now, let's take a look at the European markets. And for a look at how the European markets are performing, I'm being joined by Lars Holter in Berlin. Lars Holter, thanks for joining us. The auto industry is Germany's most important industry, as it is a major player in the country's economy. How has it been struggling for a while, and now is one of the biggest companies in the field is announcing even more cuts? What's your latest, and what are you hearing?
Yeah, actually, we're talking about Volkswagen there, Anietje, but let me just give you a little bit of a look at the markets, because I want to maybe just add on to what you just said about the Gulf markets here just a few moments ago, because we are seeing no movement here in European markets, but it is partially because of exactly that. We're having investors here being worried about this latest flare-up we've seen, of course, in the Gulf region. Investors here pretty skeptical with regards to those peace talks and the truce that you mentioned, because we have seen, of course, over the last 2 days or so, that this is not a stable situation. Also, we have yet another thing to deal with here. Donald Trump in the U.S. has threatened another tariff of 100% against the EU in case Brussels would levy any taxes on the U.S. tech companies, those digital taxes often discussed here. So very tricky situation here for the market, and that's why we're having a relatively weak start into the week. But to get into what you were just asking here, Volkswagen and the auto industry here, definitely just seeing more problem, and Volkswagen in particular saying they're going to cut another 100,000 jobs over the next 2 years. That's out of 650,000. So there would be a cut of over 15% of the entire workforce. 4 plants are in danger of being shut entirely, including an Audi plant. Audi, of course, being a more upscale brand of the Volkswagen group. Now, to just understand how massive this is, it's not just job cuts. Volkswagen is planning an entire restructuring of the company, including changes even in leadership. They're trying to become more sleek and faster and have less redundancy built into the system.
Okay, so yeah, Lars, I heard you mention Audi, and I know that Volkswagen is actually owns about 12 brands, including luxury brands such as Lamborghini, Bentley, Audi, even Skoda. So how did Volkswagen get to a point where it's become so desperate to make these cuts?
Well, to be honest here, Volkswagen only has many of the same problems really that some other German automakers have, including Mercedes-Benz, who also just announced stricter cuts. The German car sector, you got to really say, is currently being punished for, I want to call it, their arrogance of past years. For decades, German cars were a global brand, and that's why Volkswagen grew to the point, Anja, that you just mentioned, buying up all these other global brands. So Volkswagen got so big just because German cars were something. So management started losing focus, disregarded changes to the market, electric mobility being a big game changer here, of course, and then Tesla and some other brands got to work in the US. China invested billions into research and development, building up entirely new brands and pretty much conjuring a massive auto sector out of thin air. Meanwhile, German automakers pretty much rested on their laurels for too long, insisting that only a small part of the market would go electric, that their trusted diesel technology would always be in demand. That was obviously not the case. Demand for electric vehicles has risen. Chinese and some other brands from abroad put out cars that much better met customer demand, and for German firms, entire markets suddenly fell away.
Okay, finally, Lars, other than cost-cutting measures, what other strategies does Volkswagen have?
Well, indeed, the massive drop in cost cuts here are really just part of this latest concept. In addition, discussions are underway at Volkswagen regarding new cooperations with Volkswagen partners in China, as well as opening up certain sites to other industries, such as defense. That being a sector, of course, that is seeing massive growth right now as geopolitical tensions and the perceived lack of leadership of the US has EU and NATO partners invest heavily in their military. So there is some hope that Volkswagen will see some of that old growth again. However, it is likely not just coming from the auto business, but out of other sectors as well. And it's also coming at a high price, considering all the companies set to lose over the next couple of years.
Lars, well, I just can't wait to see Volkswagen come back on street, because I'm a lover of Volkswagen cars, particularly the Bentley. I don't know about your choice, but we just hope that they get out of this situation that they have.
Let's hope so, and let's hope that the Bentley is at some point in our price range, Anja.
Exactly. I think I'll switch over to a Lamborghini.
All right. Good luck to you.
Thank you. Okay, so now let's move over to the crypto markets, and starting with the headlines there, we see that Azerbaijan is moving closer to introducing formal regulations for the crypto sector. Now, the country's central bank says a draft law governing crypto assets has been completed and submitted to government agencies for review, with officials expecting it to be adopted before the end of this year. Now, the proposed legislation aims to bring oversight to previously unregulated markets and boost investor confidence. Meanwhile, the central bank is also expanding its digital banking initiatives and preparing to integrate artificial intelligence into the country's financial system. Now, let's talk more about crypto exchange. XRP Trading says its trading funds are bucking the broader crypto market trend, and is also attracting fresh investor inflows, and this comes as Bitcoin and Ethereum recorded some significant moves. Now, market data shows that institutional investors continue to increase their exposure to XRP-linked investment products, signaling growing confidence in the digital assets' long-term prospects. Now, analysts. Right, so that's our show for today. Business Incorporated, live on Channels Television. I'll see you again.